Chris, good evening.
Good evening, Joseph. How are you doing this fine evening?
Being busy. Had a couple of meetings. I had a chance to speak with a local event on some real estate tax fund. But definitely it was a very productive day on my end. How about yourself?
Oh, doing quite well. We're getting ready for the holiday here. So just getting everything wrapped up. So we're doing great.
Awesome. I really appreciate you hopping on just before the holiday so that we can have a holiday treat for all our viewers. And I know a lot of the people that going into the new year with tax season, uh, kind of not fully sure where their business stands. So for whoever our viewers, if you're the first time here, this is Joseph and Chris. We are based out of Virginia, helping you to make you more, save you more, and potentially give you more as well. And today Chris is going to be having us through a journey where we can look into each aspect of business with the KPIs. I know KPI is a buzzword. A lot of people say a lot of things, but doesn't know a lot of things about it. But the good thing about Chris is being a CMO, CFO for quite some time, and as also a CPA, he understands all of the nitty gritties of the numbers and what you really need to focus on in a financial statement of your business. Because whenever you're in a business and going to a bankers are most likely not gonna check your personal credit, but in many cases they're gonna look into your business financial statement. So without further ado, let's start, Chris. So help us understand what is the first one we're looking at.
So this is sales. And before we get started, what I want to tell people to do is really when you're looking at your numbers, you have to think like a 3-year-old. And I don't mean you win a snack time. I'm asking anyone as a 3-year-old is going to know this. They ask a lot of questions. They're asking why? Why is this? What is this? I mean, granted, nowadays you can ask Alexa, you can pawn the kid off. But when I was a young parent, I was on my own. I couldn't tell them go read it in the encyclopedia. So when you're looking at your numbers, that's the question to ask is why. Also, years ago, I was on the board of a nonprofit school. And I said, all right, I want to look at your financials. And she printed out all the transactions from her QuickBooks and gave them to me. I said, no, this is not what you need. So taught them that you want to look at the income statement, balance sheet, cash flow. So many people here, when they're sitting thinking about their financial thinking, I've got to look at all this information. No, you have reports that are going to summarize information. And what we're going to do here is summarize information even more, because the more you try to look at, the more confused you're going to get. So you want to start from the general to the specific, like right here. So the white line here is going to be last year. The green line is going to be this year.
That's a great
So
point you brought up, Chris, especially like if we were to have exactly each individual numbers to have this exact pattern,
yep.
it would have been significantly more time. And if people who are in business, if they don't honor their time of being able to summarize, you probably are not honoring your business itself. That's why you hire a CFO like us to present all of those QuickBooks things into just one line.
Exactly. Now this is showing how it is monthly, and at the very top you're going to see it that's the year to date. And you're looking at this and saying, well, okay, in the second year everything's gone down. So you want to ask yourself, okay, why is that? What's causing that? And maybe, and when I'm talking to my CFO clients, I say, okay, so what's causing that? Well, a couple of things can make up sales. See if I can get this to move. All right, so did you have more sales transactions or less? So we're looking at this and going, well, you know what? There are going to be fewer transactions this year, so maybe that's causing the sales to go down. So when you look at this, you say, well, what can I do to get that up? Are your salespeople slacking off? Are your production people slacking off? You're seeing that the numbers have gone down. So there's something happening here. And you got to ask yourself, okay, what's happening here that my sales are going down? Am I not selling enough? or are we just not producing enough? What's causing that? So again, being a 3-year-old and asking why.
Absolutely.
So then you say, all right, well, maybe let's take a look at how much I'm doing the average transaction value. And what I like in this too is like anybody walks to McDonald's and you order a Big Mac, what do they ask you? Do you want fries with that? Now they're not doing that because they want you to. They know you like fries and you want them, and I'm guilty is because I want the fries myself. But what's happening here is that okay, not only are the number of transactions that you're having going down, the amount you're charging for your amount you're getting for each transaction has gone down as well. So maybe you're not asking your people, hey, or your customers, hey, I saw some other work that needs to be done. Would you like to do this? Let's say that you own a gutter cleaning company. And you can say, well, I cleaned your gutters, but I noticed you got some shingles coming loose from your roof. We have a service. Can we do that? Sure, put me down for it and do that. Russell Brunson, in his book .com Secrets, talked about his first visit to the dentist after he got health insurance. He went in there for a free cleaning, and he walked out spending $2,000 because at each stage they said, "Wow, we're seeing this. Maybe you should do a little more work on there." So when you're looking at this, you say, "Well, what's going on with the sales order? Are we just not asking them if they want fries with their order, or the equivalent in your industry?"
As a matter of fact, this one question changes the entire dynamics. When I first started, one of the business ventures that I did earlier was Shopify. And one of the things that I missed out at the beginning is that upsell structure. If you cannot upsell, if you cannot have a higher dollar per customer, essentially it's much harder to get a new customer than upsell to the same existing customer, because if you're doing a good job, they already have a trust in you.
Exactly. So that's why you always need to think about, is there something else I can add on to the service? There's something else that you can do to help them out. So always be thinking about that as you go through your numbers. All right. So I want to make sure I didn't skip a slide here. Average transactions. Okay. So this has a couple things on it. We're going through sales and now looking at cost of sales. Well, your sales number went down, but your cost of sales went up. So why is it more expensive to be selling this even lesser amount? Did you have an increase in prices? Now right now it's 2023. We're kind of seeing prices go up quite a bit. So that might be something that's to be considered, but you always have to ask why. So as I was talking before, not getting and looking at each individual number, but drill down onto these, because this cost of sales could be made up of a couple of accounts. And maybe there's something that is a huge jump. Maybe materials stay the same, but maybe you had to pay your people more. Maybe you brought in more people and are looking down the road to be using these people, which is causing the cost of sales to jump. So is that something to think about?
As a matter of fact,
go ahead.
Sorry. As a matter of fact, I could not resist one of my experiences looking at exactly similar number about a year ago, where I was working on underwriting a business to buy a business just before 2019 to 2020, right after COVID. The aspect of the trucking transportation industry getting a hit increased the labor cost by about 7 to 8%.
Yep.
And that just almost took away the entire profit margin. So when you see someone like this, exact same numbers, like, hey, my sales went down, I'm selling less, but my cost of sales is going up. How is it happening? So that's a great parameter if someone is not looking into or have not looked into that specifics.
Right. And again, we were going from general into specific. Now, when Tusif and I walk you through as a CFO client, we're not going to go through each individual account. What we're going to have a team of bookkeepers that can help you out with making sure the numbers are straight. Then we can make sure that your numbers are telling you the accurate story, and then help you decide what do you go forward. We're going to help be your strategic partner to help you grow your business, and this is how we can help you do it.
Absolutely.
Okay, let's take a look at the next one. So again, average sale 133, average gross profit 105. So the average gross
Oof.
profit went down. Yep, that's exactly what's going to happen.
15%. That's a
Yeah,
lot.
that's a lot.
That's like the COVID hit. Think about it for a second.
Exactly. Exactly. Now, marketing expenses. So here's a big one. Remember everybody how sales went down? Well, your marketing expenses went down by about $1,200 or 1.2 thousand million dollars or something, whatever you're using, but it went down considerably. So
60%.
60%. Yeah, Tusif probably has a calculator there. He's not showing it on screen calculating these. But so stop and think about this is that, okay, I'm not bringing in as much. I'm not spending much on marketing. So maybe that was a decision that you made to say, well, I'm not going to spend anything on marketing. Things are going well because I've got customers. Well, things change. There was that famous movie, Glenn Ross, always be closing. So you're always going to be out there trying to generate new business. So
Yeah.
this could be a big, what we call driver in there. A KPI is that, all right, you're spending less on marketing. So that could, and we talk about levers, and this could be a lever that got pulled back a little bit, and that slowed your sales down. But your cost of sales pretty much went up. So something happened here. You're not bringing in the business. So that's one thing to take a look at and say, all right, my marketing expenses went down, my sales went down. Aha, next year I'm going to do a lot more marketing. Where do we begin? Let's see what else we got. Payroll expenses. Okay, so your sales went down, but your payroll went up. What are these people
Ouch.
doing? You're spending, was it $42,000 more on your payroll, and you're having less sales. What are your people doing? Now, granted, cost of sales went up, and we're not going to have a discussion about where you can have cost of labor and cost of sales, but still something's happening here, and you're going to ask yourself now, if you are an S corp or a C corporation, maybe you gave yourself a raise. Well, after looking at these results, I would fire you. So, maybe you don't need to be paid that much, but I think that when we're talking to clients, we'd be a little bit more diplomatic. But something to think about is, okay, did you get this? Did you get what you needed out of that additional amount of payroll? I get asked all the time about, should I pay myself more? Okay, so I always say, well, what more are you going to do with
Yeah.
this extra pay? Yeah, you need it. You are the owner. This is your company. You can do what you want, but will that money be better spent elsewhere?
That's a great point, especially talking about expenses. Every individual thing a business owner needs to think of a return on investment. Like
Exactly.
if someone reducing a marketing expense is not always bad. If you're getting an organic traffic, you build a big presence. Like Mr. Beast doesn't need an additional paid marketing.
Yep.
I was looking at his burger chain. On the first night, he had 30,000 people without any marketing.
Wow.
And they were waiting before night. So they were waiting in the mall from the night before just to eat the burger next morning. If your marketing team has built such a network, that's awesome. You can either pay them or even reduce the payment. But if that's not bringing in the return on investment, something definitely needs to change.
Exactly. And the next one is overhead. Like pretty much everything, it's not marketing, not payroll. Now you ask yourself, why marketing and payroll? Why those out and then everything else is kind of just what have you? Well, we've already dealt with cost of sales, what it costs to make your product and provide your service. Marketing drives a lot of things, including sales, and payroll is your people and the most important part. Overhead is just kind of like everything else. So we're looking at this, and it's an increase of $25,000, which is a little bit more, about 10%
6%.
increase. Say again?
6%, like
6%.
25 to 19.
Yeah. So think about it. All right, what in overhead expenses? And that's where you drill down and say, all right, what in overhead did you have? Maybe your rent went up. That happens. We're increasing prices. Maybe The cost of some other things just went up. So if you know what's happening there and kind of know the environment, then you're able to say, all right, this is what's happening. And then you can take action on it. Everything when we point these out, this is not to say, all right, we're going to hand you this and get done. We're going to work with you to say, all right, let's set some metrics about what you're going to do for the next month to turn these around and just make progress so that it's not going down again. That's part of our
Absolutely.
job. It's not just to hand you numbers. You can have QuickBooks or your program spit out the reports. Ain't going to do you much good. Sorry for my English. Okay, so think about that. Now, altogether, you can kind of just, when you're looking at this in general, you're kind of looking at this and go, well, yeah, wow, I'm just seeing costs go up. It's the exception of marketing, which really cost me when I'm looking up top here. So I kind of need to do some marketing. I got to talk to my people about what they're bringing in. Got to see what's causing cost of sales to go up so much. So what we would do is work with you to say, all right, let's take a look at the biggest levers here and what's going to make the biggest impact in increasing this net profit. Because right now you have got a loss of $93,000. That's not good. So what we want to do is work so that this gets to a positive number. Maybe there's something changing in here that can help you move that the other way.
Absolutely.
So taking a look at the whole picture, you take a look at the whole picture, you move down to the individuals, and then you can answer questions. Now, we're taking a look at cash flow. I'm going to show you both years here. So the interesting thing about this is that, all right, cash flow last year was up 312, but this year is down 166,000. Well, you look at that and go, oh, well, shoot, we're throwing out a lot of cash. Well, take a look at this thing. Last year, you brought in 344,000 from debt. You increased your debt load by 344,000. Why? What did that bring you? Because probably some of the things happening in the cash out from operations might be interest on this debt. Was that the right thing to do? So when you have guys like Tusif and I around, we can say, just before you do this, maybe think about what the debt cost is going to be. Because something else that happened here was that the owner pulled out $277,000. Why? I mean, that's a really, really nice car. Probably
Maserati.
We're talking Maseratis here. And if you did that, I mean, look at what it did to you the following year. Or even that current year, is that you had to borrow money. Did you really need to pull out $276,000? So if this year looks a little better, but another thing here is looking at this cash out for the purchase of assets. So that's something going out. What do you do? What assets are you buying? It's hopefully not that you bought a Ferrari for yourself last year, and this year you said, well, I want to buy a Ferrari for the business. The IRS is going to be knocking on your door. So
absolutely,
no, maybe not. But what assets are you doing? When will you see a return on this? If it was supposed to streamline information or operations, we're not seeing that yet. When are you going to get it? That's when you call back the salesperson and say, hey, we're not seeing this turnaround. You all need to get back in here and recalibrate the machine. When I worked in South Carolina, we had $1 million machine that was pretty much the size of, I'm in my living room here. It's the size of my downstairs, $1 million. And it made screws and it made washers. That's what it did, $1 million. What did it pay off? Well, it's been 20 years. I can't really tell you. But it was, when you're making these investments, that's when you talk to us to say, this is what we're going to do. I've just lost myself. There we go. So here we get the ending bank balance. It went down by about 170,000, and you only have 3 months worth of cash to cover your expenses. So that's probably not a good thing. So with going through this, it's always asking questions, why? What caused this? What could be going on? And then you want to say, all right, let me focus on just a couple things to move the levers. And that's where Tusif and I come in to work with you on this to make sure that you're, to have people to bounce things off of, because you're not going to talk to your spouse about this because they just may not get it. You don't want to bring your employees in and tell them, hey, we're having some issues there. And believe me, the 30 years experience in business, you start telling employees, yeah, things aren't going so well, they're at the door. The rats are gonna leave the ship. Not that your employees are rats, but it's the closest analogy I can think of. So you need people like Tusif and I to say, hey, I'm kind of having a hard time here. I need somebody to bounce something off of. And Tusif and I love this stuff and love to work with people to help them understand what's happening in their business and try to make things better. So I think that's everything in the presentation I was going to do here for you, Tusif. What are your thoughts?
That some of them are pretty awesome things. I would love to spit out some of the personal experiences here, um, with the line of working on buying businesses and expanding businesses. Two stories specifically comes to my mind. Number one was one of the businesses that I was almost on the verge of buying. It's in Richmond. Great. The owners are great. Everything is awesome people. The only challenge was their expectations and the presentation of their financial situation was not at how they needed to see. So when it comes down to the labor law, labor cost, Virginia State that year changed their minimum payout from $9 something to $10 or $11 something, and they were still paying their employees about $7 something. And those employees didn't even have an idea that, hey, we could actually ask for a raise. So they ended up in a situation that, hey, we were able to do this. But one of the biggest things that they did not see, as you brought up on your presentation, is the cost of goods sold. And of course, the cost of goods sold was increased. Their net gross income did increase because of the volume of the sales, but per unit profit was plummeting. They were losing money per unit from year to year. And the reason that I backed off of that deal was the moment I get into that shoes, my labor cost is going to be going from $7.25 to $11.50 for the same year, because now I have a new management in place with lawyers and stuff looking into my payrolls. So that's a big thing, especially if you're looking into any businesses, buying or growing or selling. Make sure to understand these pictures in the first place. And unfortunately, a lot of the times brokers don't bring those, I guess, not so sweet things for business owners, just so that they can keep the listing. And they ended up feeling offended when you're actually telling a spade a spade.
Mm-hmm.
So that's one personal story. I really wanted to buy that business. I was so excited to buy that business, and literally, say in some cases, even I was just thinking, what am I going to do after I say goodbye to my W-2 job at the time? I mean, that's how excited I was at the time. But then realized to understand that, hey, don't get emotional when you're talking about numbers, because at the end of the day, you are leveraging that. Another thing that you just brought up is with the debt. In one of the conversations today, someone said that, hey, for me to write off my 179 deduction, can I buy 10 cars? I'm like, are you having a fleet? Are you having a business of fleet? Then yes. But if you are running a real estate flipping company, then it's probably, yeah, if you're having a flipping operation where you're having trucks, then okay. But if you're having a Tesla, saying that, hey, I'm going to run a flipping operation with a Tesla, not the Cybertruck, but the regular Model S, that's probably not the best usage of your 179 and the tax deduction for buying 10 cars.
Yeah, I run into that quite a bit. It's right now, it's December 23rd. And last month, I'm going to get a lot of questions about, okay, what can I do can I buy a car because I want to get a big tax break? Well, what are you going to do with a car? Well, if I buy this equipment, what are you going to do? Or should I buy a lot of office supplies so I can write it off? Are you going to use the office supplies, or you just like want to have them so that you can write it off? The thing I always tell my people to think about is, all right, if I spend $1 on this, how much more dollars am I going to get back in sales? Because when you become rich, we've got some more tax savings for you that we can use. So the thing for us to do is to get you rich so the taxes don't matter.
Absolutely. I mean, think about it for a second. Elon Musk and Donald Trump or Jeff Bezos, they personal level, they're probably not paying a lot of taxes.
Yep.
Another thing to consider, like even though if you say, for example, there is a business that is losing money, if you do understand the proper matrices and KPIs, those losing money might be very profitable as well. Like Amazon, for about 16, 17 years, they were losing $11 a client. But every meeting they would say, hey, we did a great job this year. Why? Because they were using a lot of other elements like tax credit or R&D credit, real estate stuff, and they were on the process of acquisition of different businesses. That's why you have so many things in Amazon. So that's why whenever you're looking into those, when you are a CEO, that's one of the reasons that I feel like thinking like a CEO is a very important thing. Is when you're a CEO, you can't interpret those numbers on a very plain English. That's what's going to differentiate between you being a mom and pop $100,000 business or $1 billion business.
Exactly. So it's really just when you get to that level. If any of you have read Rich Dad Poor Dad, before the broadcast, Yusuf and I were talking about the book. It's that you don't want to create yourself a job. You have the employee, you have the self-employed. Well, basically, that when you have a job, you want to get to your business or an investor so that the business will run itself. And there's a great book called The E-Myth that one of my mentors had recommended, and he preaches that book all the time. Is that, are you running a business, which a business is a system? That's all it is. It's a system and you're running it. If you are being run by the system, you're not a business owner. But if you set things up so that you have systems in place to run it for you, your life's going to be just that much better. And then you can have a bigger impact on your business.
Awesome. I appreciate that. Any last words before you close out, Chris?
Look, basically, again, be a 3-year-old. Ask the questions why. And then look at the big picture into small. Don't try and look at all the small things. Look at the big picture, then move in. Because some of the little things aren't going to matter that much. It's going from big to small that you're going to find your problem areas. And not only find your problem areas, find your solutions.
Absolutely. And to extend on that, I would like to understand is when you're tracking KPIs, understand first which KPIs to track in the first place.
Yep.
If you are tracking how many calls you're making or how many texts you're sending, that's not always the best KPI, but how much those are converting into sales, that's a better KPI to keep on your business itself.
Yep, exactly.
With that, thank you very much again, Chris. I really appreciate your time just before the Christmas Eve for this awesome presentation for our people. And I appreciate your time, your family, to allow us to have a conversation as well. With that, we'll definitely see you on the next one.
Have a great one, folks. Thanks, Yusuf. Always a pleasure.
Bye.